What is Ethereum and why is it different from the rest of crypto? It has always been Bitcoin in the spotlight,
Bitcoin
right?
is.
Have you thought about whether there have been cryptocurrencies apart from the crown king Bitcoin in existence? There are quite a lot of cryptocurrencies out there, and Ethereum is one. Since the inception of Ethereum, it has been a strong contender of Bitcoin. People have even called it the next Bitcoin because they believe so much in it as a group. And of course, it has proven itself in several cases that it might just be everything people say about it. So, what exactly is the next big coin? What do you need to know about it, and how is it different from every other coin out there? Before we dive right to it, there is one thing you should know, and I just have to say it. This is not financial advice. So if it is not financial advice, then what is it? It's just to enlighten you. I don't want a case where someone will want to take advantage of your ignorance because you don't know what Ethereum is. This is not a drill. You can choose to take whatever you must have learned from this and use it in a way you can. This reminds me of the funny threads that fly through social media whenever there's a dip. I don't want to be caught up in that, okay? So, Ethereum, what is this? You must have heard of blockchain technology. If you haven't, then I guess we'll have to start from that point. Blockchain is the string that holds the world of cryptocurrency. It is impenetrable and cannot be altered. Once it bears witness of a transaction, it recounts it just as it sees it. It can be likened to a scenario in the park where there's a sudden change in weather and rain pouring from the sky. You know, if everyone in the park is asked to recount their story, it will be the same, although some might exaggerate it. There will still be a constant element in each story that will be recounted. That is just how blockchain works. It strings up every transaction that passes through its network. Once a block is established, every consecutive transaction on that particular network is stringed, each bearing witness of the previous and present. Now that we know what blockchain is, we can now proceed to know what Ethereum is, since it functions on blockchain technology. It is a digital platform that uses blockchain technology and expands its use to a wide variety of applications. Ether, its native cryptocurrency, is the second largest on the market. Ether is usually written as ETH. Whenever Bitcoin, BTC, is mentioned, you can expect Ether to be mentioned. The Ethereum platform was created in 2015 by the programmer Vitalik Buterin, with the perspective of creating an instrument for decentralized and collaborative applications. This was 6 years after Bitcoin was created. Ether, its native cryptocurrency, is a token that can be used in transactions using the software. Like Bitcoin, Ether exists as part of an autonomous peer-to-peer financial system, free from government intervention. Also, like Bitcoin, the value of Ether skyrocketed in a short period. In January 2016, Ether was trading around $1, and in January 2018, the cryptocurrency hit its highest level yet at $1,391. However, in October 2020, Ether was trading far from its all-time high to fall below $390. Its value is volatile, with frequent intraday fluctuations. Although this is only one among hundreds of cryptocurrencies, it is also one of the few that have a significant market capitalization, along with its two great rivals, Bitcoin and Bitcoin Cash. Solana is also beginning to provide strong competition to all of these cryptocurrencies. Okay, so you must be interested in how it works. Before we dive right into that, have you clicked on the like button below? Yeah, that button to give this video a thumbs up. You can also share this with your friends too. So Ether, like other cryptocurrencies, uses a shared digital ledger where all transactions are recorded. It is publicly accessible, completely transparent, and very difficult to modify afterwards. In simple terms, the blockchain network. You can refer to this digital ledger as the blockchain or a chain of blocks, and it is built through the process of data mining. Miners are responsible for verifying groups of Ether transactions to form blocks and encoding them by solving complex algorithms. These algorithms can be more or less difficult as a way to maintain a certain consistency in the processing time of the blocks, around once every 14 seconds. The new blocks are then linked to the previous blockchain, and the miner in question receives a reward. In other words, a fixed number of Ether tokens. Normally it is 5 units of Ether, although this figure may be reduced if the cryptocurrency continues to rise. The Ethereum blockchain is very similar to that of Bitcoin, but its programming language allows developers to create software through which to manage transactions and automate certain results. This software is known as a smart contract. A traditional contract describes the terms of a relationship in a written or typed form. For instance, a check or withdrawal slip in the bank. On the other hand, smart contracts make sure those terms are met by writing them in code. They are programs that automatically execute the contract once predefined conditions are met, eliminating the delay and cost of manually executing an agreement. You know how there can be long queues in the bank with so many people that need attending to? In this case, most times, you'll have to wait your turn. This is not the case with Ethereum. To take a simple example, an Ethereum user could create a smart contract to send a set amount of Ether to a friend on a set date. They would write this code to the blockchain, and when the contract is complete, in other words, when the agreed date arrives, the Ether will be sent automatically. They are all cryptocurrencies, but they are quite different. As I pointed out earlier, shortly after the launch of Bitcoin, Ethereum looked at the way blockchain technology was being used and imagined how it could be used beyond just currency. Starting with smart contracts and decentralized applications, dApps, Ethereum soon realized that they needed a single currency for their platform that could be trusted according to their protocols. This caused the Ethereum Foundation, a body that oversees Ethereum activity but cannot independently change protocols to create Ether. The mining process for Ether is the same as for Bitcoin, but unlike Bitcoin, Ethereum miners may charge a fee for confirming a transaction. Also, there is no limit to the amount of Ether that can be issued. This removed the perceived scarcity that may be a factor in Bitcoin's higher valuation. Ether is the recognized currency that can be used throughout the Ethereum network, but is not widely accepted elsewhere. In the same vein, Bitcoin cannot be used as a recognized currency on the Ethereum platform. Ethereum has a much lower value per Ether token. In addition, many people are shocked by the fact that some tokens that live among Ethereum's smart contracts have a much higher value than the same cryptocurrency on its blockchain. There is currently more than 111 million Ether in circulation, and more will continue to be generated, even when Ethereum 2.0 and its proof of stake mining model go live. Originally, it used proof of work. The proof of work or proof of work protocol is the best known and oldest consensus protocol that consists of the parts of a network successfully carrying out computationally expensive work to access the resources of said network. But currently, proof of stake has been making headways in the cryptocurrency world. Its algorithm is responsible for choosing the verifier of the next block based on several mechanisms generally related to your bet. With proof of stake, the probability of finding a block of transactions and obtaining the corresponding reward is directly proportional to the number of coins that are deposited, and not by the amount of work invested in mining. Ethereum in this aspect has a clear advantage, one that has been widely leveraged to develop a broad ecosystem of decentralized applications geared towards the financial sector, DeFi, a sector whose flourishing may be the prelude to the massification of cryptocurrencies. Of course, Bitcoin hasn't been sitting idly by either. It currently has different projects that aim to develop an ecosystem of Turing complete smart contracts. All this is to expand the power and usability of this network. I hope you have been able to learn a lot about important information on Ethereum. One more thing, why haven't you hit that like button? Finally, whatever you choose to use this information for is your choice. You can share what you know about Ethereum with us as well. I would love to learn from all of you.